All right. Welcome, crypto community. Jeff Kirdeikis here with Jan Strandberg, CEO and co-founder of AcquireFi. Jan, thanks for popping on today.
Hey, thanks, Jeff, for having me. And thanks, TrustSwap, for supporting us.
Fantastic. To kick it off, do you want to give us a little high level of your background in the crypto space?
Hey, for sure. So my name is Jan. I've been in crypto from 2011. I did two different well-known startups in crypto. One of them was Paxful. Was there for 4.5 years, grew it up to more than 4.5 million users, $2 billion in volume. Then I quit after 4.5 years. Then I co-founded YieldApp. I think the TrustSwap community knows YieldApp really well. Was there for 2 years. Then 8 months ago, I quit and started building AcquireFi. And now we're here.
So, you kind of glazed over these huge numbers, $2 billion, $500 million. That's a quite significant feat in those times. What did you attribute the successes to be able to get there? And then secondly, what made you decide to move on to a new venture after that?
Yeah, that's a good question. I think with Paxful, we were mostly focusing on the third world countries, and we understood Bitcoin really well. We understood the use cases of BTC, especially in third world countries. So that was a huge benefit for us. I think most of in the beginning, we had only US people, but later on we had only people from India, people from Nigeria, people from third world countries where basically the financial system wasn't that great. And the only way of, for example, sending money home was through Bitcoin. So that was a way of learning hey, this crypto is actually very beneficial in other use cases than just speculation. So from there on, it was all right, what are the other use cases for crypto? And then we just started expanding. And later on, after 4.5 years, we had more than 4.5 million users. I think I traveled to more than 50 countries to speak or to organize events and so forth. I learned a lot during that time. Then with YieldApp, again, absolutely different customer base. YieldApp was mostly focused on institutions, high-level clients. And that was very learning, understanding counterparty risks, understanding hey, how does yielding actually work in DeFi? And there's a lot of people saying hey, if you have a really big DeFi book, it's very easy. Hey, go here, you get 20% APY and so forth. But actually, once you get a bigger and bigger book, it becomes much, much harder to put that assets somewhere that is safe, that is not speculative, and that is actually sustainable. So I think one of the reasons YieldApp is going really well is because of that. We had a very good DeFi team, and second of all, we understood hey, despite you scale your book, you have to keep your risk level very close.
That's fair. Yeah. Well, one is the risk aversion. And the second one is, I think, a problem that Yearn Finance ran into is they just amassed such a huge treasury. When they'd start moving their money around to different pools, they'd realize, oh no, the APY rate of the pool is now significantly less because we have so much more capital in there now.
No, absolutely. And keeping it sustainable, I think that's very crucial. But yeah, YieldApp team is doing fantastic. I'm not involved anymore there day to day or anything else, but yeah, team has been going pretty well, and they're still getting more and more AUM despite the bear market, which is good.
Yeah, people looking for somewhere to make money now that they can't make it in a lot of other places, so may as well go for the stable thing. And I think YieldApp really weathered the storm incredibly well. They were basically one of the only few projects that really did dodge Luna and that entire whole shebang thing. So congrats there for having the right due diligence in place. So jumping right into it then for AcquireFi, what would be the high level elevator pitch on AcquireFi?
Yeah, this is really easy. AcquireFi is an ecosystem where Web3 founders can exit their startup, where me and you can invest in real world assets, and then where institutions, DAOs, and maybe hedge funds can take up these different Web3 solutions or Web3 startups. And then they can also invest in these real world assets. So we have two things, basically. We have M&A, which is very traditional. And then we have real world assets, which is basically crowdfunding. And I think the crowdfunding aspect is the key element here to be successful, because there's a lot of companies that are doing this, like putting real world assets on chain. but they're very scattered. And I think if you can have a marketplace or a crowdfunding platform where you can gather all these things together, I think that's a very, very lucrative business to be in. And also, like nowadays, when you do let's say crypto project, you have to understand like where are you getting revenue. So we're targeting two things. We're targeting the retail people, so that's the crowdfunding part. But then we have the institutional money, which is basically the M&A side. So they're both supporting each other. They're both like giving out more and more visibility, impressions, and bringing out clients.
Yeah, and I think the timing for it is really fantastic as well. Even though it's a bear market, I feel like inflation is hitting so hard so many people, and the only way to really hedge yourself against inflation is to hold valuable assets. But when the price of a house or to own a business or even a lot of stocks have really high prices, it's out of reach for the normal guy. So I think this is a really interesting way of being able to put that within reach. Would you be able to walk us through what it looks like, if I had a business and you wanted to participate in this business and we wanted to fractionalize, what does that look like? And how does, on the tech side and on the high level?
Yeah, so we have these things called investment pools. These investment pools are basically different real world assets that you can invest in. So eventually we will have a lot of different assets. One of them can be equity. For example, we do have equity deals coming up. Our actually first investment pool is going to be a school in Scotland that we got 10% out. So we're going to fractionalize that, give out different allocations. The more tokens you have, the more allocation you get. Kind of the same kind of token model like Launchpad have. The more basically tokens you have, the more tiers or higher tier you are, and the more you can invest in these different pools. But what's the beauty on these pools is that they're basically SPVs, and those SPVs are then divided by equity. So let's say like you, Jeff, invest $5,000, you get $5,000 out of that 10%, and you get NFTs. Now, the beauty with NFTs is that you can actually start trading them on the secondary market. As long as they're inside of our platform, they're securities. But once they go outside of the platform, they become a metadata. And that means that you can actually start listing them on the secondary market. Why is that important? Is because let's say you have a Ferrari, or let's say you have, I don't know, a watch, and we fractionalize it. And now you and me can invest in that. Now, if I would own it by myself, it would be quite a big risk, like I basically have to buy a lot of different watches to build a really good portfolio. But if you fractionalize it, you can actually start building like these fraction ownership deals, and you can start building a very lucrative, diversified portfolio. And I think that's something that, like in crypto, we haven't really been touching it yet, but it's becoming more normal. Like you probably invested in the bull run in properties or in gold or something else. But for the normal people, it's pretty hard to get into these deals. There's two things why. First of all, you don't have the deal flow. And second of all, you don't have asset managers telling you like where to invest. And I think one of the reasons I started building this AcquireFi was because in Yield App, we had a lot of asset managers coming to us with different deals. And unfortunately, with Yield App, we did not invest in them. But with AcquireFi, I really want to dive deep into investing in real world assets, because I think putting them on chain and having the possibility to diversify your portfolio, I think that's very important. And as you touched before, the economic downturn is coming, so it's very good.
Yeah, definitely. And so for this fractionalization, just to ensure that I'm understanding correctly, there's basically two buckets. You could either have it in equity or in assets.
That's correct. So we have different deals, right? Like you could see us like Republic. I don't know if you guys know Republic.co. They have different equity deals, but they do have collectibles or real world assets also there where you can invest. So yeah, kind of like different categories. Different categories have different items inside of them. Like for example, we will have collectibles, maybe some Pokemon cards or something else. Like the idea is that eventually these investment pools will have as many possible lucrative investment opportunities. And these investment opportunities are usually collectibles or equity deals. Yeah. So in short, yeah.
No, that makes sense. So I definitely have a lot of questions because I find this incredibly interesting. And in 2017, we saw security tokens kind of take a stab at some of this. My first question would be on the asset side. Let's say it's Rolexes, and I want to fractionalize my Rolex, or somebody's fractionalizing their Rolex, whether it's some museum, whoever. So I understand, okay, everyone holds a portion of this Rolex. It's represented in NFTs. But then how does that work in terms of the storage costs, and if the underlying asset itself gets sold, how does that play into the ecosystem?
Yeah, for sure. That's a good question. So we do have a management fee that we take for whatever we raise on these investment pools. Second of all these assets usually are in vaults. We do have partnerships in Dubai. We do have partnerships in Switzerland. We're looking for partners in Asia now also. And what basically happens is that we build an SPV, special purpose vehicle. With the help of our SPV, we can basically give out the different equities, and we won't liquidate these assets until 1 to 5 years. So they're not going to be liquidated right away. Like, let's say we make money on Rolexes, the price goes, if a Rolex goes up, we won't liquidate it. Our idea is to eventually build a DAO, and that DAO would basically vote like, hey, this is a good time to now sell these Rolexes. This is a good time to sell these cars. And from that on, like, eventually we will have the feedback from the community. Like, it's two-way side, if that makes sense.
It does, yeah. And so when let's say it's the 51% vote or whatever the voting threshold is to liquidate the asset with the DAO, how does that work for those? I guess who voted yes and who voted no. Let's say you liquidate the Rolex for 50 grand, and I'm not in the Rolex market. I don't know exactly what these cost these days. 50 grand, let's pick an easy number. And okay, now how are you just doing an airdrop of USDC to everyone who held the NFT, and then they just hold this collectible NFT?
Yeah, so basically they need to get the NFT back to the AcquireFi platform. They need to stake it. And once they stake it, you are basically saying like, hey, I own this equity of the SPV. Now the SPV itself will get liquidated, and those assets, or let's say it's USDC, they will come to AcquireFi platform, and we will distribute the profit to all the AcquireFi ecosystem holders, or at least people that invested in this investment pool, which is a Rolex. And if you voted no, we will still distribute the funds, like, no matter what. We had the 51% voters said yes, so that will happen.
All right, so it makes sense. On the asset side, could you be able to walk us through a little bit how it works on the business side, on how you fractionalize equity and how dividends come into play?
Yeah, so it's the same kind of process. We do a SPV. You pledge to the SPV whatever size you want. Let's say it's the $5,000. And then on the equity side, you will get the same kind of NFT. It doesn't matter if it's really real world asset, if it's equity, whatever. There's going to always be an NFT coming to you. You will stake it. And once you stake it, you will have the equity ownership, or whatever you want to call it. On the equity side and on the dividend side, it depends on the investment pool. So for example, this school that is yielding 10% a year, they have distribution quarterly paced. That means that every quarter we will distribute those funds to you that invested in this investment pool. So it's kind of very simple. It's not that like very different from actually owning a share in a company. It's just that because of those NFTs, and if you bring those NFTs outside of the platform, you can start the secondary trading, and building that liquidity on those secondary markets is really crucial. Because what I think will eventually happen is that there's a lot of NFT holders at the moment looking at different art pieces, but maybe they want real world assets. So they will basically come to our platform, buy these different NFTs, and start building up those portfolios.
Makes sense. So let's say Amazon starts off day one, they start issuing these NFTs that are worth 50% of their business. And now there's, let's say, 50 NFTs all worth 1% each. Amazon goes through its seed stage, its Series A, Series B. It's now worth, let's call it, $500 million. Well, now all of a sudden these NFTs that, were probably purchased for, $1,000 may now be worth, couple million, few million, if not more. So are those NFTs that people hold then able to be fractionalized again? Because I'd imagine it'd be a little bit difficult to find liquidity on such a huge amount.
Yeah, so with the SPV and with these equity deals, it doesn't matter if it's Series A, Series B, Series C. The SPV itself will still hold whatever equity asset value it has. Well, let's say we own 10% of a company, that 10% whatever gets diluted eventually, but it doesn't matter. Like, you will still own that little share despite the company would get diluted or the company would get sold. You will still get the appreciation, and like it really doesn't matter. Like, it's still liquid enough on the secondary markets, I think, to be able to be traded. Like,
understood.
Again, like if you have a small share and a company goes to Series C, of course, there's dilution, but actually your shares goes up, like despite the dilution and more investors coming in. So it's actually a beneficial thing for you as an investor.
Definitely. Yes. And so how do you see this comparing to security tokens in 2017? And, particularly, what do you feel security tokens did wrong?
I think it's the secondary market they missed. And also back then, NFTs were not that popular. I think now what you see is that NFTs are becoming more and more usable, let's say like this. And the more use cases you find for these NFTs, I think the more you can actually put real world assets on chain. And that's the beauty. Like, imagine like having an NFT and having only the metadata of equity, and you can start trading it on the secondary market. I think that's very, very profitable. And I think that's going to become a normal moving forward. With the security tokens, the problem was that because they're securities, there's no secondary market, right? And if there's no secondary market, there's no liquidity. And if there's no liquidity, there's no trading. But with NFTs, they're a little bit different. And you can actually use quite a lot of different technologies to make them not securities when you go off chain or on chain.
And that's where I'm particularly interested. Of course, I'm not an expert at law at all, but my layman's view of this, and I'm looking forward to hearing your insights here, is, a security token is a representation of equity that's, an expectation of profit that's receiving dividends, that, that you go through the whole Howey list and you're like, that's a security. All right. When I look at the NFT, it seems to me like it checks off all the exact same things as a security token, but it's just like, oh, it's an NFT. So, hashtag don't worry about it. Can you kind of enlighten us on
really
what
true.
the difference is there?
Yeah. No, you're absolutely right. Like, NFTs itself, as long as you stake it, it's a security. But when you unstake it, it turns into a metadata, and that metadata can be transferable to different places. So basically, it's just let's say, a promise note or a promise of getting equity eventually. Like, what will happen on the secondary market, like, you will not get benefits. You have to come back to AcquireFi, you have to stake them and do a KYC check. After that, you will get equity back. But it's a promise note when you take it and unstake it. And that's when the security laws are very vague. And we do have a security broker license also. So we are on top of that. Plus, we do have also crowdfunding licenses coming up in Switzerland and Estonia, which means that we can do crowdfunding for different assets.
So correct me if I'm wrong then, but it seems like what security tokens were doing is this token directly equated to equity. It directly represented equity. Whereas what you're doing with this NFT is the NFT doesn't represent equity. It's like you say, it's metadata, it's a promise, it's an agreement. And it becomes equity when it's staked on the platform. When it's staked on the platform, things are KYC, it's non-transferable.
Yeah, so that's absolutely correct. And I see a lot of competitors coming up with the same kind of legal structures than us. But yeah, I think there's a lot of opportunities that people will find out, and people will also understand, like, hey, you can do quite a lot of things with NFTs. If you just have a very good legal team, first of all, You have all the licenses needed to onboard users and getting these first security tokens or whatever you want to call them. But once you go on chain and you have this metadata, they're just promise notes. And once you understand that, they're not securities anymore.
Makes sense. So bringing it back a little bit now to the two value propositions of AcquireFi or business verticals as I see them, the M&A marketplace and then the investment pools and fractionalized ownership, and looking at competitors in the space right now, starting with maybe an easier one, M&A marketplace. The one that I've seen, at least, I'm sure you've done deeper research, but would be MicroAcquire, which has, a super extensive list of, M&A acquisitions, and they have a little crypto tab. You click crypto and it filters by all the crypto companies. So how do you see AcquireFi having a competitive advantage over a company like MicroAcquire?
Yeah, so MicroAcquire does mostly SaaS companies at the moment. They have very little crypto deal flow at the moment. I think what we have been doing really well, so we have more than 70 companies for sale at the moment. We're getting around 2 to 3 different companies a week now. And moving forward, once we launch, I think once we have that open order book and people see that there's actually deals happening, we are going to be the number one place where M&A happens in crypto. I think one thing that MicroAcquire did really well is that their founder is really well known. And he has been building the platform for at least 2-3 years. And there's actually two other competitors, but they're mostly in Web 2. There's Empire Flippers. They do $200 to $300 million a year. There's Flippa that does almost $1 billion a year. And I think in M&A, like in crypto, there's no one actually doing it. So we're going to be the first one actually focusing purely on Web3 startups. And when I say Web3 startups, I don't mean only like startups that have a token, for example. And that's like, if you think about the crypto ecosystem itself, it's been around for more than 10 years. There's a lot of affiliate products, SaaS products, trading companies, exchanges, launchpads, all these things that don't have a token. And I think that's the beauty of it. And I can tell you that we have conversations already with different venture studios from Web 2 that are looking to bundle up these different Web3 companies into one big behemoth, basically build them a little bit and then resell them either or build them even bigger. And I think that's going to happen eventually more and more in crypto.
Yeah, makes sense and agreed. How do you, what does the revenue flow look like specifically for the M&A marketplace? I feel sometimes, having a token can sometimes be detrimental to, companies bringing in profit and being able to scale because you have token holders saying when staking rewards or, when buybacks. So how are you guys handling that? What's the thought process?
Yeah, so we are making around 10 to 12% of every M&A deal. So that would mean, like, let's say you have a $3 million deal, we get 10% out of that, that's 300,000. 30% we buy back from the open market. So basically we're distributed that 30% back to the ecosystem and community. And that's one way. And then we have these investment pools. Every time we do an investment pool, we take a certain fee, and that certain fee will then also be distributed back to the ecosystem. And I think that's the beauty of having two different revenue streams. One, you have the institutional money, which is the big money, but then you have also these investment pools, which are retail focused and which are mostly like small pools. And I think the interest on real world assets are just going up. If you look at other crowdfunding platforms, they've been doing really well despite the bear market. Republic, one of them, very, very good, very, very good. And I think that's going to happen eventually also to crypto. Like more and more companies are going to go to real world assets and start doing these equity deals.
Agreed. Yeah. And on the equity deal and the fractionalized asset side of things, what's the competitive landscape looking like right now?
I would say there's actually no one doing it like in a very high level. There's Prop Chain that we're actually working with. They do equity deals and apartment deals and fractionalized ownership deals for apartments. They're going to be very good partnership deals. But other than that, like no one is really doing it yet. I think there's a lot of people trying to do it or they're building to do it, but no one has launched it. And that's why we're really trying to get this platform up and running in the end of the month, at least the beta, and go from there.
And that's so surprising to me because it's such a massive market. This is $1 trillion plus market, assets and equity. It's 10 trillion, probably more. And it's like, in 2017, people were super aware of this, and they're like, oh, they're trying with security tokens, they're hitting legal roadblocks, and it's just not working. And now it's like, hey, this like NFT metadata solves all the problems. It seems like, this is one of those kind of shake your head moments where it's like, how has this not happened yet? And, is there going to be a huge rush and it feels like this could be the next big thing, like how we had DeFi summer, or then there was the NFT wave or whatever it is. And it seems like this is such a no-brainer industry. How are you thinking about that? And, maybe a two-part question for that whole preamble, why has nobody done this yet? And what do you anticipate to see in the coming year in terms of the competitive landscape?
Yeah, I think one of the reasons no one has done it is because tech has had the biggest multiplier. If you look at the traditional stocks, like if you invested in tech for the past 3 years, you were doing between 20 to 50% APY. But the landscape is changing. So it actually makes sense that also other people will start diversifying their portfolios into real world assets more and more. Why no one has done it is because of the legal frameworks, first of all. And second of all, we didn't understand really how to use the NFTs other than doing monkey pictures and some others.
Yeah.
And speculating. But I think more and more are starting to understand, like, hey, these NFTs are actually pretty useful. There's going to be more and more competitors coming into the space, that's for sure. I think if you have good deal flow like we have, you will succeed pretty well. But I think the other thing is that you will have to have very good regulatory frameworks. You will actually have to do all the KYC and so forth for all your customers. Some people don't like it, some people do. For myself, I think it's very good that we have some regulation in this industry. Being here for more than 10 years, I've seen it all. And I think it's actually okay-ish that there's coming more and more regulation. Like, it's not that bad. The decentralization is actually also good. Like, they should walk hand in hand, but there needs to be like a sane, or let's say a good legal framework for us to grow into $1 trillion business or $1 trillion market cap business. It's been very hard. Like, look at the market cap now of crypto. It's not even 1 trillion, I think.
Yeah, no, and I agree with you on the regulation as well. There's going to be, and I feel it's necessary, that you have the full decentralized, anonymous, privacy. We need that. And we also need to play with regulators, because to be able to bring equity and assets on chain, you need to have your stuff in line. So I agree with you there. How are you looking at the upcoming roadmap of AcquireFi, and what are you prioritizing and most excited for in the medium term?
That's a good question. I think the social aspect, what we're trying to build. So first of all, you can communicate with all the investment pools. And as a community, you can talk about it. Like, there's going to be chats, there's going to be different, I would say, due diligence things that we can do together. We are putting up a due diligence DAO. And that means that once the investment pool goes up, people can talk about it, and we will reward different people if they give out some useful information and so forth. So there's the social aspect. Second of all, like next year, hopefully faster, we will do borrowing and lending. Why borrowing and lending is so important is because for small and medium enterprise businesses, it's very hard to get loans. And as you yourself, like a founder, why would you sell equity when you can get a loan? And actually, like, there's a lot of good businesses already in crypto that are making decent amount of money, but there's no banks that are borrowing them money because they're crypto. And I think that's going to change eventually in the future. And that's another, like, I wouldn't say DeFi aspect, but a yielding aspect that will come. And that's something that we're trying to tap into in the future. Building this ecosystem with different offerings. Like, we have something for the founders. Okay, you can come to our place, you can get a valuation, you can exit your Web3 company and so forth. Then we have something for the retail people, which are the investment pools. Maybe there's some collectibles that we can acquire together. Maybe there's some luxury cars that you would not have access to if you would do it if you do it yourself alone. And then third of all, I think getting all these crypto communities together and understanding like, hey, like it's good to diversify your assets away from just crypto.
Mm-hmm. And how are you going to populate the marketplace? Obviously, you know, as you mentioned, 2 to 3 projects coming in daily. That's phenomenal traffic before you even launched. Are you guys going to be having a sales team? Or are you going to be relying on ads, organic traffic? What's that going to look like?
Yeah, that's a good question. So we do have an own outreach team that is doing basically contacting different venture studios, VCs, talking to them, getting that deal flow going. That's on the M&A side. That's over 70 companies at the moment. Then we have Ken Mack, who is one of our co-founders. He has a very big community of different, I would say, real world asset managers that we're in talks to. We're also working with other crypto companies that have very good deal flow. But I wouldn't say the deal flow itself is a very hard thing. We are having very good conversations with different asset managers. Those asset managers are very professional and they do have deals constantly. It's mostly like, how do we vet these deals to be correct or to be right? And second of all, like understanding what the community wants. So for example, I had a community member reach out to me and be like, hey, I want to invest in Pokemon cards. And I was like, all right. And this guy was like $1 million whale. Like, it's mostly like here in the community, understand like, hey, what are we wanting to own as a community? And what are we wanting to eventually like diversify into? So yeah, I hope that answers your question.
It definitely does. Yeah, thanks. And then finally, to wrap up on the token utility, you know, as I was looking, it seemed like, you know, it's like a staggered. As you hold more tokens, you get more benefits. Can you maybe outline the 2 ends of the spectrum, like, you know, the entry level versus the mega holder or the whale, and what those 2 levels look like?
Yeah, for sure. So we have tier 1. Tier 1 is basically giving access to some of the deal flows. Gets a minor allocation on these investment pools, and probably gets a very, very minor staking reward and so forth. But then again, if you're tier 5, you get all access to our very exclusive M&A deals. You get access to all these investment pools. So we will have some very lucrative deals there already that we're thinking of only offering to tier 4 and tier 5. Third of all, you will get also the platform benefits that we basically do when we buy back the token. And fourth of all, when we build out the DAO, you will have the most voting rights. And my long-term vision is to build a DAO. And this DAO would start buying out these different companies and eventually wrap them up into one big behemoth. And as you can imagine, like we do have alpha already. Like all these deals that come to us, especially in the Web3, like that's alpha. We call it alpha because we know before anyone else that this company is going to be sold. Second of all, we get all their financials. We understand like, hey, does this deal make sense? Now, if we would have a DAO and we could buy out these different deals before the market, that would make it very lucrative. And I think in the long-term vision, that DAO will buy out different things and raise capital.
Mm-hmm. Then it's just going to be maintaining the project and continuing to build. That's always the tricky part if you're trying to acquire them and they just got their $10 million payday.
I think you're very well known, very, very into that thing, right?
Yeah, definitely. Right on. Well, to finally wrap it up, I super appreciate the time. Are there any good books or videos that you've seen that have been like super educational that have stuck out in your mind that you've read or seen over the last little bit?
That's a good question. I actually had one book that I was looking at. It's called The Psychology of Money. It's a very well-known book and basically teaches you what to think about money, how it affects you, and maybe what you could do with your money once you get it. It's like a time lesson on wealth, and once you have wealth, it's really easy to build it even more if you know where you can put and get yield on it. I don't know. It was a very good book. I recommend it.
Definitely. Yeah, I've gone through that one as well. A great book. So good. I love that recommendation. Jan, super appreciate the time. Thanks for popping on.
Hey, thanks, Jeff. And thanks, TrustSwap community, for supporting us. I think it's going to be a very exciting launch. And hopefully, you guys can participate in the 45K challenge. It's 25K for the winner. So, yeah, go for it.
Well, if they wanted to find out about that 45K, where would they navigate to find it?
Oh, they have to go to our community page, which is our Telegram, or I can put the link on this video if that's okay.
Yep, perfect. Sounds great. All right. Appreciate it, Jan.
Hey, thank you, Jeff.
Thanks, everyone, for watching. See you next time.